the 19,300 mark.
If one is looking at a medium-term 12, 24-month kind of a perspective, maybe longer, things are looking pretty good.
India's retail equity revolution, it's nothing less than revolution in what has happened post-COVID and what is happening and what could happen in the next 3-4 years.
We see from Titan point of view, it's a multi-decadal opportunity of value creation.
Jio Financial Services making it to the market at 262 rupees per share.
I think it will get a book value similar to what a Bajaj with Chola gets, because it would be more a digital lender to probably grow at a much faster rate.
We're above the 19,350 mark currently as we speak. It's a gain of 50 points on the Nifty.
For the markets, continues its up move. It is 82 points higher on the Nifty.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 News studios. And over the next hour, we'll get you all the action from the markets. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios. And Nigel, as always, is joining us from the newsroom floor. Guys, hi, good afternoon.
Afternoon.
So things are looking up and up. Vast improvement over, I think, last Friday and last Thursday and last Wednesday, because markets have been sideways, but not today. We're up. Now, the simple kind of way to look at whether this perhaps builds from here is to look at some markers. On the Nifty, that marker, the first marker is 19,400. We're right there. The day's high, by the way, is 19,415. And we need a first port of call, a close above 19,400. That is basically where the Nifty will meet the smallest downward sloping, the first trend line from the recent highs that meets the Nifty at 19,400, level we put out in the morning as well. So intraday breach, but we need a close on the Nifty Bank. The similar level is 44,100. Again, not very far away, can happen. But beyond these levels on both the Nifty and the Bank Nifty, you know, you start to kind of think about the fact that maybe the short-term pullback that we've seen, we're starting to put some of that behind us. So that's, I think, all that I think one needs to watch. Mid-caps and small caps are doing well. I think between 0.5% to 0.75%, no problems at all. Market breadth is pretty okay. So it's a decent screen if you go down the market cap curve. Rima, hi.
Hi, and particularly it's looking better, looking up when you consider that Reliance Industries with its 10% weightage is dragging the markets lower. Reliance Industries is a cut of 1.3%, and if you pull up the contribution plate, you would see that it's taking away about 25 points from the Nifty itself. So if it wasn't for Reliance Industries, the picture would have been significantly higher and comfortably closer to that 19,420 mark. Look at the way the broader markets are rallying. The mid-cap index is a gain of close to about 0.8%. The small-cap index is up. The advanced decline ratio is strong with about 3 stocks in the green for 2 in the red. And just to cap it off, you've got Europe as well holding up smartly. I think the CAC is up 1.2%. The DAX is up more than 0.5%. The Dow futures is up 75 points. So Europe too has a clear shade of green right now.
Absolutely, and that seems to be helping our markets kind of find their own level. Though, of course, perhaps we were one of the better performing markets in Asia in any case, because Hong Kong, for instance, was down and out and has closed in negative territory. Of course, in the Asian context, India has done really well, despite some of those concerns in China. Just want to point out a couple of the interesting movers and shakers in the broader markets. Now, if we talk about, of course, some of the newsmakers, then Tanla Platforms is down about 5%. Root Mobile is up, and we'll talk more about these stocks in a bit because of this big Vodafone Idea deal where Tanla hasn't seen a renewal, and the contract apparently is going to Root. Rima will give us more details about that as we go forward. So those are some of the newsmakers that are in the news. KEC International, PNB Housing, these are some of the other stocks that have managed to find good traction today, all on the back of news. KEC, for instance, is orders, but it's held on to that 5% up move, and that tells you the buyers are alive and kicking in the broader market. NMDC Steel, BLS International, Titagarh Rail, and JNK Bank. These are some other examples of stocks that have had a pretty good session. Midcap index looking very, very good with a gain of 0.8%, and it's a solid advanced decline ratio as well. So broader markets, Nigel, I think really cheering the fact that even the headline indices have put on a decent show today.
Well, Surbhi, I was just at the Motilal Oswal conference, and the mood out there, very, very positive. I met a lot of investors, a lot of HNIs, a lot of institutions as well. And the tone entirely is very, very positive. I also heard out to Mr. Puneet Dalmia, and he as well is indicating the way India, maybe in the near term you have a little bit of a tussle, but otherwise we're in an uptrend. So that's just a broad takeaway that I got. Now it's been a good session for the bulls. In the last few sessions, you buy the dip and you square off and you make some money. Today as well, if you did that, you went to a little below that 90,300 odd. If you bought that, and in fact, you're getting 100 points higher, and that's been the trend of the last few days. Intraday, you get those opportunities. That's why I think the final 60 minutes is going to be very, very important, because the bulls will want a good end to this rather decent session. And if you look at the options data, 19,300 put, 19,350 put, both of them are fairly active. So the bulls are seeing some kind of writing activity on the put side, indicating that maybe they believe that the lower levels, it's 19,250, which we saw last week, maybe that will hold out. The Nifty bank, that's performing. Remember, that was underperforming. You don't want it to outperform if it doesn't have to, but you want it to perform in line with the index. And the Nifty bank is performing in line with what we are seeing on the Nifty. The crucial resistance zone for me on the Nifty bank is 44,200. Last week, we went numerous times out there, but we couldn't cross that. The next level that I'm looking at, if it manages to cross the 44,200 odd, is 44,700, because that's where the technical level, the 50 DMA, comes in at. So those are the crucial levels that I'm looking at on the Nifty bank. Well, I said the last hour is going to be crucial. So let's find out, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, well, it's been that sort of a day. You'll have to say more good than bad, at least as of now.
Right. I think, Nigel, a couple of days, in fact, on Friday rather, not a couple of days back, the last trading session, I had talked about the 19,200 will act as a very strong support zone. And there was a weekly gap, some retracement levels as well. So I think that's done nicely, and we've seen a bounce back. My still belief remains that this will be a choppy market, but since we have hit the lower end of the range, or we have hit the areas close to the lower end of the range on Friday, the movement now could be slightly upward bias in the next 1-2 days, but closer to 19,600, 20,650 zone, we could experience selling again. So for the time being, I think shorts should have been closed and profit should have been taken. And I think, while we haven't gone long on the index per se, but I think very clearly on the stock side, we've explored a lot of long positions. I have a buy right now on LIC Housing Finance. I recommend buying here with a stop at 416.5 for targets of around 435. And NMDC, disclaimer, we have personal interest. I have some positive delta bias positions over here. So that's a buy with a stop at 116 for targets of 125.
Okay, thank you very much for that. Let's get to the big story of the day, and that's Jio Financial Services. It's made its D-Street debut, and it's listed at 262 rupees per share. So pretty close to the discovered price of 261.85. But currently, as we speak, it's locked in a lower circuit of close to about 5%. This is the first IPO from the Mukesh Ambani stable from the house of Reliance in close to about 2 decades. Abhishek is here with more details. Abhishek.
Well, to begin with, Jio Financial Services will continue to remain in FTSE indices, and it will also get added to MSCI Global Standard Index on August 23. Just to highlight, the filings do indicate that the business areas of Jio Financial Services will include consumer and merchant lending, payments platform, insurance broking, AMC, and other non-lending activities. So promoters hold about 46% stake. Key personnel over there is KV Kamath, who is the chairman, Hitesh Sethia, who is the CEO, and others are up on screen for reference. Jefferies have released a note in which they say that the key numbers as of FY23 for Jio Financial is that the balance sheet size is about rupees 1.1 lakh crore. Rupees 67,100 crore is the MTM gain, that is mark-to-market gain, mostly on investment in RL at cost of 15,400 crores. Now, core net worth is about 31,600 crores. Jio Financial Services has investment in pref shares of associates and JVs, which is worth about 17,600 crores. On the asset side, the investments are rupees 1.1 lakh crore mark-to-market gains, and majority of the residual assets that are liquid in nature. So Reliance AGM is on 28th of August. Markets will like to hear or will await details on what they put out with respect to Jio Financials. Back to you.
Okay, thank you very much for that. Let's get to Deepak Shenoy, founder of Capital Mind. He's with us on the show now. Deepak, what's the long-term potential of Jio Financial Services, right? They potentially have the network effect. They've got the brand, they've got the capital. They're going to be present in so many spheres of the financial services, whether it's AMC, brokerage. So they're playing across the space, and we've seen what they did with Telecom. So over the long term, is Jio Financial Services a buy, a stock that one should hold in their portfolio?
Rima, firstly, we own the stock because we own Reliance and we have the shares. But I'll be honest, there's nothing in the company so far that allows me to give you a long-term view, because it's just a company that kind of has dealt only with its associates. And they haven't yet built out many of the things that we're talking about, which is the AMC, the brokerage, the lending company, and so on. I think there's a lot of potential here that they could exercise. They could lend to the SME community, which anyway serves Reliance, is served by Reliance Retail, or either as a supplier or as a customer. It could serve the Jio arm itself, which is the 5G or the telecom arm, through the various outlets and distribution it has. But they haven't yet started any of these businesses. Right now, what it has is a bunch of Reliance shares, which are probably valued around 1+ lakh crores. And that's not yet part of its official book value, because the book value holds it only at cost. So it can be a big company if it executes on a lot of these measures mentioned. It will not need to raise external capital if it's able to either sell or monetize the Reliance shareholding that it has. It will also possibly see a lot of selling pressure in the next few months, because in the Indian indexes, you're going to see it exit the indexes. The Indian index funds themselves hold probably around 2 lakh crores worth of Reliance, worth of overall AUM. And if 10% of that, and a certain percentage is still Reliance Jio Financials, they will have to compulsorily sell it, which is why you're seeing this. I think it's nearly 3 crore shares, about 750 crores worth of volume that's sitting on the sell side, and there's no buyer, because everybody knows that these people have to compulsorily sell. So we're going to see a lot of time before it stabilizes in price. But I think also that they have to give us more insight into the business.
That's Jio Finance, the big news story of the day, the demerger and the subsequent listing finally complete. Deepak, I'm going to ask you something completely out of the textbook. I'm just taking a chance with this. I don't know if you've tracked or had a look at Tamil Nadu Mercantile Bank at any given point in time. I'm just wondering what could perhaps be going on here. By the way, Tamil Nadu Bank, this is an 8,000 crore rupee market cap share entity that is, and the stock's completely gone through the roof, 15% higher. The buying has really picked up in the last couple of sessions. Pull up the stock price for you. So Deepak, this is just one example. The other one that comes to mind is JK Bank. JNK Bank has been rising on big volumes over the past couple of days. You can't ignore it. Do you see any story here? Can you join the dots? Because on one hand, we have larger banks that have been selling down because of foreign ownership or margin compression concerns, etc. And then you have these smaller tier 2, tier 3 banks that are really popping up.
I think quite interesting. We've been, and I didn't, of course, know about Tamil Nadu Mercantile Bank, but I've seen JNK Bank's charts, and that's always been a value play, really, for the longest time. And I think to that extent, it's remained value simply because the valuations compared to other banks relatively are lower, and there are lots of surprises in the books once in a while. So once in 3 or 4 quarters, you see this little element of, oh, I didn't know this was also a problem. And that's why I think the valuations have been relatively low. Maybe this is one of those periods when there's some clarity on this. I don't have any insight or information that is, that compels me to believe that the stock should rise this much, but probably have to go back and see. Sometimes price rises come before the news. This is unfortunate, but that's how it happens. And we'll probably later realize why. I currently don't have an answer.
All right. Hi, Deepak. Good afternoon, Deepak. What about ITC? At around 200, no one was looking at it. Gradually, people started looking at it. The stock went dancing away to around 500. And then in the last 1 month or so, it's been a relative underperformer. It's actually corrected 12% from the top. Your view at around 440, 445 odd, the best is in the price or the best is yet to come?
No, I think it's fairly valued. Honestly, ITC has been fairly valued for a long time, probably a little overvalued now. Not because of anything else, but because to a certain extent, it's mentioned its capital allocation policy and the demerger. So some of the surprise element is out, and perhaps a little bit disappointing for some investors. But they're going to continue to retain the FMCG plus cigarette business as they are, at least for the near future. There is perhaps, the reconstitution will create, different kinds of investors. They will be some moving to the hotels arm, which will have to be independently funded going forward. And ITC itself will own some 40% of it. So we don't know how much that will channel further investments in as well. So I don't think it's that, the demerger adds a lot more in terms of a sum of the parts valuation for ITC. I believe it's, going to be where it is. And as a company, it's probably not going to grow in high double, even in above the 15% numbers going forward. So paying too much for such a stock is probably not that great. But then I've said that for even a Colgate or an HUL, and look at where they're trading right now. So, I mean, maybe I'm horribly wrong and they need to trade at those levels. But really, I don't see, paying so much for ITC or many of the FMCG majors in this relatively high interest rate environment.
Okay, got that. Deepak, stay on. We'll have some more questions for you. Right now, we do have to take a break with the news that the market's looking quite solid at the headline index level as well as the broader space. 19,400 on the Nifty. We'll take that break and come right back. Today, we also get chatting with Amit Gupta of ICICI AMC. We'll be speaking with him, ICICI Securities PMS. We'll get a couple of market themes going with him as well.
Augmented intelligence can expand the boundaries of human creativity across industries. But true disruptions occur when human intelligence meets the power of technology to create ideas that shake up the world. Meet the disruptors who are steering innovation and reshaping brands and businesses. Storyboard 18 Young Guns, this August in Mumbai.
Welcome back. You're with us on Closing Bell. The next stock on our radar is Titan, and this is after Titan completed the acquisition of CaratLane. They bought out about 27% equity from the founders, and they've spent a little over 4,600 crore rupees for doing that. Mangalam is joining in. Mangalam, I guess, going by what you were also explaining, this looked a little pricey, but it seems the market is okay with what they've paid.
Well, with the kind of growth that CaratLane has shown, it seems like this deal was, one, imminent, and secondly, you pay some price today, then pay a much higher price, say, a couple of years down the line. And that's what the street is taking, and as a result of which the stock too has moved to the high point of trade. But first, the news, they bought about 27% stake in CaratLane, additional 27% stake for a little over 4,600 crore rupees. And for perspective, between 2016 and 2019, they acquired 71% stake for a cumulative investment of around 400 to 450 odd crores itself. So what they're paying for 27% is in absolute terms 10 times more than what they paid for 72% itself. But then again, CaratLane has been growing over 70% CAGR in the last couple of years. At the same time, the company's turned profitable on an EBIT basis as well. Margins at around 5.5%. Earlier it was a negative. And at the same time, with 75% revenue coming in from studded share, the street believes that they can increase their margins as well. We posed the same questions to the company as well, and the company said that they are confident of the value that CaratLane brings to the table. Importantly, CaratLane has been growing at a 50% CAGR historically and expected to grow faster than the overall portfolio of Titan as well in the future. And at some point, CaratLane's own margins, which are currently 5.5%, will cross Titan's jewelry margins as well. So if that were to happen, then there would be further value accretion too. How would they fund this deal, 4,600 crore rupees? Well, they have cash of around 3,000 crores, so they will have to take some debt. But Titan's market share in the jewelry business is around 7%. CaratLane is slightly under indexed with 6%. So there is an additional kicker for growth coming in here as well. And no plans for listing CaratLane separately. Were that to happen, maybe the street would have worried that, okay, there would be a holding company discount factor playing out as well. But no, that's not the case. And as a result of which, we saw the stock move higher.
We see from Titan point of view, it's a multi-decadal opportunity of value creation. And that is what the primary motivation for us to kind of increase our stake at this point of time. As far as this deal is concerned, our balance sheet is pretty healthy. We have a good cash position, but we are going to do part debt funding for this deal, and we are working towards that. And by the time deal comes to closure in next 2 months kind of horizon, we should be ready with our financing plan. CaratLane is largely diamond jewelry business, so the opportunity to keep inching up margin and gradually not only equal Titan jewelry portfolio margin, but be slightly better than that exists. We talk about that our jewelry business with respect to jewelry industry in India is current 7% market share and will go towards 10% by FY27. CaratLane similarly within Titan jewelry portfolio sits at about 6-7%. And they should go towards 10% by FY27. So certainly they need to grow, and in our expectation, they will continue to grow faster than rest of the portfolio.
CaratLane is all diamonds, right, guys? And I asked them whether there's, with this lab-grown diamonds, artificial diamonds. I mean, they're apparently, the technology is coming up so fast that, and it's taking a significant share in the US from, the diamonds.
The natural diamonds market,
So the problem is lab-grown diamonds margins are much lower.
Okay.
So we don't know how fast it will come up here. I wonder when they sell artificial diamonds, they'll have to say, right, that lab-grown diamonds.
Absolutely, yeah. You can't pass it off as the same as a natural stone.
But what if there is no difference? I mean, it's the same, right? You can't make out a difference that feels, touches. I mean, everything is the same. So I don't know. I mean, I don't know how it'll work out. By the way, Titan has invested in a lab-grown diamond company, I think in the US, they said. And they said, well, we are
Prashant,
following.
If this is a hint, and if you were, looking to send a message back home about lab-grown diamonds, I don't think it's going to be taken. I think the natural original will be appreciated.
No message at all. I don't go there.
But it's quite phenomenal. I was just checking. CaratLane's revenues before Titan brought any stake in 2015-16 was 141 crore. And now I think they ended last year with more than 2,100, 2,200 crores. So with Titan's distribution and of course the way CaratLane itself has grown in its omni-channel presence, it's quite astounding, the revenue growth.
Absolutely. Let's ask Deepak if he likes the natural stuff or the artificial stuff. Deepak, any thoughts?
Apparently, you can't make out Prashant anymore.
You can't make out, that's what I'm saying.
That's what the men are saying. It depends on what the women feel, if the women are convinced or not.
Absolutely. No, I mean, the thing was diamonds, natural diamonds are imperfect. And lab-grown diamonds are perfect. So you could tell one from the other. Now they have found a way to add imperfections in, which means more margins for people who can effectively have something that looks and feels and exactly like a natural diamond, and it could be manufactured at a fraction of the cost. Plus, you can't sell diamonds. You can buy diamonds, but selling diamonds, nobody pays them those obscene prices. So it's just nice to own, but not great as an asset. So, but having said that,
what about the stock? If not the diamonds, what about the stock then?
So here's an interesting thing. Titan trades at 84 times earnings and about 10 times sales. They're buying CaratLane for effectively 5.5 times sales going forward, maybe 6 times sales going forward. So it's also a great story for the Indian startup ecosystem because it's a great exit for a founder who's been at it for a long time. So congratulations to them. And to Titan, I think it's accretive because if you're paying 84 times earnings today, and if you add a little more earnings and to buy those earnings, you're paid less as a multiple, then the market cap will only go up if you continue to pay the same PE. So in a sense, this is win-win for everyone. So assuming, of course, that Titan continues to get an 84 times earnings kind of multiple, but it is a very richly valued stock. So to that extent, them paying this kind of a number for CaratLane is completely justified. In fact, I mean, they should have gotten paid in shares valued at when Titan bought CaratLane, but obviously to compensate, they get cash now instead. I think it's a good deal for them. I think it's sound for Titan to own the complete brand and scale it up from here.
I think it's the largest exit in the D2C space and the second largest liquidity event for a founder, exo when the promoters sold their stake in Flipkart. Promoters sold their Flipkart stake to Walmart. Deepak, do stay on. We've got one more stock and we'd like your opinion on that, and that's Tanla Platforms. This is a CPaaS company, and the stock is under pressure because its partnership with Vodafone Idea is not getting renewed. The two, Vodafone Idea and Tanla Platforms, had gotten into a partnership 2 years ago for a period of 2 years. So that contract is coming to an end in November of 2023. It's not going to be extended. Therefore, there is going to be a loss of revenues of about 17 crore, 9 crores in terms of profitability on a per quarter basis. On a full quarter basis starting November. Instead, this deal has gone to Route Mobile, which is why you have a bit of a green tick coming through on Route Mobile as well. Deepak, do you look at Route Mobile? I remember we'd spoken in the past, I think, on Route Mobile when they'd gotten into the deal with Proximus, and you tweeted as well about, this Route Mobile and Proximus deal. But do you look at Tanla and Route?
More Route than Tanla. I think, we're not covering Tanla, but Route has been interesting. But though this Vodafone thing is, it's a bogeyman because Vodafone itself is not, sure of itself as a going concern going forward. And therefore, if you win a contract from a customer who may not be able to pay you back, is that really good for you? I don't know. It's relatively small for Route, so I don't really understand the bullishness on that right now. But I think unless you get some clarity on how Vodafone is going to continue, somebody's got to put in capital inside it, and it's got this enormous amount of debt that it has to, by next month, again, they have to make a big payment. I don't know what they're going to do about that. So given all of these factors, I'm not sure whether getting the contract out in their favor is actually going to add a lot to them. But overall, I think the company is going through it. The share price has been lackluster for a while, and the mobile industry itself the growth has kind of slowed down a little bit. So I would say right now, this deal itself is not going to make a big difference, and for Route itself, it's going to take some more time and some more quarters before I think the growth starts showing up again. So I just wait. We don't own anything right now. We used to in the past, but we're just waiting for things to turn around.
Okay, got that. Deepak, we'll leave it there. Thank you very much for your time. It's a pleasure as always having you with us here on CNBC-TV18. Well, we are up 100, which means we are above 19,400, almost at the day's high, by the way. 19,412 is where the Nifty is now trading at. Amit Gupta is Senior Vice President and Fund Manager at ICICI Securities PMS. He's joining in. Amit, good to have you with us here. Thank you very much. You know, last couple of days we were seeing slightly sideways, small pullbacks here and there. Will that sort of price action continue to develop, or you think, well, you know, just turns right back and starts moving up again? What's the sense? I'm talking slightly more near term here.
So I think some more consolidation is possible, which is not bad for the market, because I think if you look at selectively some of the Nifty stocks and some of the non-index stocks, because this is a time when the broader market slowly will again come back, and the large cap stocks possibly they may go into some kind of consolidation or some kind of profit booking. And I think because the global markets, if you see, so I think there is some pain definitely there, because the bond yields in US have surged very sharply, and that is where I think some kind of profit booking we are already seeing in the global markets, and some reaction definitely can come in our local market. So this is a time when you need to be there more in the non-index stocks, and I think very, very selective Nifty stocks now.
Okay, all right. Hi, Amit. Good afternoon. Amit, name a couple of stocks, right? Places where you all have increased allocation, or maybe a couple of stocks where you have decreased allocation. So we get a sense in terms of how you're viewing this markets right now.
So I think when we look at from the decreasing angle after the China, because there were some hopes that kind of stimulus will be given in China, and then there may be some revival in the metal stocks. But still, if you see the landed cost of the metal in India, it is still lower than the domestic steel prices. So I think that is where some kind of pressure is going to be there on the metal stocks. Value-added steel, that can perform, because that is where you garner better margins. But otherwise, we have brought down our positions in some of these commodities. And I think commodities can remain little lower, because crude has come up. But eventually, if the demand from China is lacking, I think commodities again can decline, which is good for us. And I think there are many crude related stocks, which are also some building materials. They can perform better. I think the domestic story going ahead in India, particularly from the tourism perspective and the festivals, I think that is where we need to focus more. I think the coming 4 or 5 months, we also have the one-day World Cup. So this is where tourism stocks can perform. So hotel is one category which we have added recently. I think these stocks, they had not performed in the last 6, 7 or little more period. And that is where I think after this consolidation, when the market, even if the market has come down, I think this sector can pick up the strength. And we know about hotels that every year, some 15-20% of surge in the tariff rates are very much likely in the coming 4 years. And that is where if any company is there which may have some little bit of debt also, I think that can also be seen. For example, Lemon Tree, if you see 7,000 crore market cap approximate and 1,700 crore of debt, it could have remained little laggard in when we compare with Indian hotels, which was a debt-free company. But now I think when the tariff rates are going to be increased, more traction, more occupancy, and I think this is where possibly in another 1.5 to 2 years, it can be debt-free company also. And this is where more alpha can be garnered from such kind of stocks now going forward in the market.
Hi, Amit. Afternoon. Rima here. I think one of your stock picks is Tata Communication. It's a part of your, PMS portfolio. Now, while the company's top line, particularly on the data side, has been looking up, there is some concern on the margin front, because the last 2 acquisitions that the company did, Switch and Kailera, both of them are margin dilutive. Would you be worried about, the weakness at the operational level, margin level? And what would be your thesis to play Tata Communications over the long term?
So if you see this company, last, I think 5 years, if you see the revenues had remained stagnant and the margins have remained little volatile, I understand that. So market has seen this volatile nature of margins in this company, and it was more focused on when this particular turnaround situation in revenues will come and the factors which will be leading this turnaround. And now that is what market has seen. And we have seen the commentary from the management also. It's already has 23% of ROS, and they are targeting more than 30% of ROS. And if you see the data revenues, as you have already spoken about, so it was somewhere in single digit. Now it is around 14-15%, and they are targeting more than 20%. digital services is going to be part of the company more than 50%. I think this is where the growth is going to come, and that is what market was looking at. And once that looks like now, even if the valuations are a little bit steep because the stock has already participated from 1400 to now 1700, but I still believe beyond 2000 is waiting for the stock now going forward. And that is where we need to keep our positions intact. And that is what we have done. And it is definitely one of the best bets that we had in our portfolio in the recent period. And I think despite the market fall, if it is resilient, it's a good sign. And that means the market is saluting the revenue growth, which it is picking every quarter on quarter now. And that is what it will remain focused. Margin accretion, margin pullback, I think that will be extra thing that can come up on the top side, on the stock price addition now.
Okay. Amit, hi, good afternoon. Let me ask you about, of course, not just the news of the day, but I think this is going to be a talking point for many, many months and years ahead. Jio Finance is a reality now. The listing has happened. But beyond today's headline, the question is really, will the NBFC space, players like Bajaj Finance, do you really think that we are set to see some mega disruption? I mean, Jio did that in Telecom, but then Telecom is a very different business. Here, you are, aligning to market realities in terms of interest rates, lending rates, etc. So to that extent, financial services is a different ball game. But what would you expect in this landscape? Whether you're looking at AMCs or insurance companies or lenders, NBFCs, and would that impact or influence your stock picking in this sector in any way?
So when the interest rates are still elevated, I think beyond NBFCs, you need to look at possibly the banks. It will remain a good bet, but it has also become a consensus trade. If you look at in the recent period, possibly many portfolios, they are holding many banking stocks. And that is a reason once the NIMs, have reached to that level now, and it's a little bit of shrinking we are already seeing. So I think that is where banks can go into some kind of consolidation now. PSU banks were looking better. In fact, Q1 financial year 24, we have seen 95% jump in the PAT of the PSU banks. They have come down because of the recent Adani news. But I think, again, that news came out before also, and the stocks had declined. So there may be a possibility of some higher bottom formation there. But eventually, if the profitability remains intact, even though some NIMs may not be, going higher, because when we saw the repo rate hike last time, we have not seen the home loan rates increasing afterwards, but the FD rates actually have remained intact or a little higher because they have to raise money. That is a challenge. But it's still, when we look at the return on assets, which is already crossing 1%, when we compare the valuations of these companies, when we look at the last 10-year NPAs, which are actually very low, and we look at the corporate lending book, which is growing only by 6.5%, and the average lending book in the market is around 15%. So there is a lot more room for these corporate linked banks to garner the market now. And this is where I think this is a good theme to be in. And that is what we have also done in the portfolio. We are overweight in some of the 1 or 2 PSU banks.
Okay, Amit, need to slip into a very short break. As we do that, on the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our technical experts. Amit, thank you very much for joining in.
Welcome back. Well, we're hovering around that 19,400 odd mark on the Nifty. It's been a pretty good session, actually. But a good time to tell you what's going on in D-Street chatter. Nimesh joins us, and he is joining in from the Motilal Oswal conference. Nimesh must be picking up plenty, right? I was there for a short while, and the bullishness, you could really sense it among all investors as well as some of those large investors. Tell us, how do you reading today's trade?
Absolutely, Nigel. I'll talk about the FI mood as well. But broadly, the sense I'm getting is the good start to the week, largely on back of FIs being better buyers. So that was not the case last week, but that seems to have changed a bit in today's trade. Also, the domestic liquidity has eased off a bit because of the Jio Financial listing. So, that's helping to some extent in the broader markets as well. That's the overall feedback. I guess from a sector point of view, clearly the metals are standing out, and so are the names, some of the technology stocks which are doing good and are well bid as well by the larger institutions. Having said that, from a technical point of view, are still stuck in this range between 19,300 on the downside and maybe 19,700, 19,800 on the upside. So that the technical range continues for the Nifty. Coming to that, FI mood or the global mood. In fact, I got some feedback from the conference as well. That a lot of new FIs from near geographies have registered this year for the conference, and the interest seems to be quite high from the first-time investors as well. So that actually sums up that India clearly stands out in terms of FI interest and FI participation, at least in the near term. In fact, I'm going to interview a couple of investors from Japan as well who've come for the first time. So interesting feedback as far as conference is concerned. Even the corporate mood seems to be quite strong. But I guess today's rally is largely backed by the fact that the FIs are better buyers, and the fact that some bit of liquidity is used because of the Jio Finance listing.
Got it. All right, Nimesh, what about individual stocks? What are you picking up?
Well, Nigel, in terms of individual names, the first stock is Carnex Micro. That stock has been buzzing off late, even in today's trade, in a good amount of volumes as well. I understand the company is close to a fundraising very soon, so that's something to track as far as Carnex Micro is concerned. The second stock is Jindal Worldwide. Marginally under pressure today, but I believe there is a large block as well. And maybe in the disclosure, there could be some clarity about a hedge fund buying a large block. So that is something to track in Jindal Worldwide. The third stock is ITC. After many days, some bit of buying traction seems to be back in ITC as well. So the counter is well bid by the larger FIs. That's the overall feedback. So the volumes are expected to be strong, and some bit of interest is back in ITC as well. And the last stock is NIT Learning. Not much been talked about, been a relative, consolidation phase, so to speak, for the stock. But today, for a change, there is good amount of selling interest from larger FIs. So the delivery volumes are going to be high, but on the downside. So some bit of selling is picking up as far as NIT Learning is concerned.
Okay, well, Nimesh, thanks very much for that interesting list, and it's always interesting that conference. So enjoy yourself. Thanks very much for joining us. Well, earlier today, we actually spoke with Ramdev Agarwal, chairman and co-founder at Motilal Oswal Financial Services. That point that Nimesh was making about new investors registering for the conference from new geographies, Ramdev made that point and more. Listen.
Increasing number of participants. Second, the increasing disposable income of all these guys. So, and third is the increasing corporate earnings. So when all three come together, and if you look at from the FI side, FI in last 30 years have sold only five times, and last time was the last year. So I would think probabilistically they would not be net seller in a meaningful way for next 2-3 years. So now you have foreigners buying, retail buying, corporate earnings very good. I think you can't get a better picture than this.
Okay, well, things seem to be coming together, as Ramdev points out. Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. We are holding just around the 19,400 level. Mitesh, what do you have?
Prashant, I'll go with a couple of power names. NTPC is a BTST. I would recommend this one with the stop just below levels of 217, a target of 221. And the other one is Power Grid, which I would recommend taking a BTST position with a stop below 245 for targets of 252.
Okay, got that. Thank you very much, Mitesh, for the trades at this hour. Let's now turn the spotlight on the box office, which has had a really good run of late. And we've seen that in some of the stock prices. Well, PVR Inox obviously has taken flight in the last couple of weeks. Now, the three recent box office releases, that is Gadar 2, Jailer and Oh My God 2, have drawn in pretty big crowds, and the numbers seem to be looking quite good. Surabhi Sataria is here with the details. Surabhi, fill us in.
So the numbers are looking strong, and it looks like the occupancy is coming back to, similar to pre-COVID levels. Now, Gadar had the biggest second Sunday collections with 39 crores. The 10-day collection in India is close to the 400 crore mark. It is at 375 crores. And with the 11th day, it is expected to cross the 400 crores mark. Jailer also is not too far behind. The 10-day collection is near the 300 crore mark. The other films which have crossed 300 crores has been Pathan, Bahubali and KGF. So it's been a while since the films, some of these films have crossed the 300 crore mark. And apart from this, the September lineup for the movies is also extremely strong. We have the Denzel Washington starrer Equalizer. We have also the Shah Rukh Khan starrer Jawan, which is coming up, and also the Rajkumar Rao starrer Shri, which is coming up in September. So there's 16 movies lined up in Q2 of FY24, and out of those, 5 out of 16 movies have already done exceptionally well in the theatres. So with this, the expectations are that the occupancy levels will cross the 30% mark, which is currently at 22% for PVR INOX. So good collections coming in for the box office.
Okay, slow and steady, and after a long time. Thank you very much, Surabhi, for that. So, hoping to get to at least 30% occupancy with this, this lineup of movies. We have market expert Anand Tandon now joining in. Anand, good to have you here. It's good to be discussing, weekend themes even on a Monday. But I think that's just been the sign of things, considering the kind of crowds that the theatres are now drawing in. Now, PVR INOX hasn't run up as much as a lot of the other mid-caps. The stock is up barely 15-16% in the last 1 month. Would it make the cut for you if you believe that this tide is indeed turning?
Well, the tide is turning only to the extent that there was no water at all, right? I mean, for a longest time, there was hardly any kind of program that was movies that were coming through which were of interest to the public. So from that perspective, the new releases at least have managed to get people back into the halls. But PVR was never very cheap, even during the worst of times, and they were losing money hand over fist. They continued to, remain fairly aggressively valued. So it is not surprising that the delta over there is somewhat muted. My argument would be that I think, it's the entire space is still going through a churn. And it is not very clear where the value lies now in the media space. So from that point of view, other than the fact that the delta near term in the earnings will be very good, and therefore tactically you could be looking at playing for the near term. Longer term, I think the strategy still needs to be looked at more carefully.
All right. Hi, Anand. Good afternoon, Anand. I wanted to ask you about Exide. That's been one of the big underperformers in the last few years. However, in this year, it's up close to 50%. So maybe, in fact, the street is giving that value to those shares that they have in HDFC Life. Maybe the business itself is evolving. They're talking about putting more money into, more into batteries, etc. that will be used in the time to come. What's your view on the stock around 260?
This has been a bit of a laggard in terms of its own space in which it operates, right? I mean, at the end of the day, even in the best of times, their cost of operations or their delivery was a little weaker than their competition. And other than the fact that they have now got out of a drag in terms of the insurance, etc., there is not that much that has changed. The battery situation continues to remain more, the interesting part in the battery is now the new EV batteries that are coming through. And I don't think any of the Indian companies really have technology to manage that. So you will have to continue to look at external suppliers. Maybe there will be JVs, etc., which they will also participate in. Overall, it is a space in the auto ancillary business which is among the weakest. That said, because of the fact that there are a lot of the ICE engines still operating, to that extent, the business will continue to do kind of okay for the next few years because there will be replacement demand. But it's a business which is going to taper off, and unless one sees a credible move towards being able to go after the new EV batteries, I would again argue that there are better ways of playing the auto ancillary sector than batteries.
Got that. You just want to play out this soundbite. Anand, hi, coming to you. But this is the L&T MD and CEO, S.N. Subramanian, we're talking about the sort of order books of capital goods, infra companies, etc., which is looking very robust. But the L&T chief essentially saying that while order books are swelling, there is a labor shortage, which basically is preventing execution at a much faster pace. My colleague Rachna caught up with SNS. Listen in.
These labor associates are required for doing carpentry work, reinforcement work, for doing welding, for rigging, for earthwork, masonry, plastering, so on and so forth. Now, there is a huge amount of people available, but with the sudden increase in activity, you need labor with a particular skill set. Otherwise, the right quality and safety levels cannot be maintained. Also, you need to have productivity. When you look at it from that point of view, as of today, I would dare to say that we have more than 30 to 35,000 laborers which are immediately required.
30 to 35,000 laborers required immediately. So to kind of work on the order book. L&T's got an order book of some $50 billion, order backlog that is. Anand, any thoughts on this one? I mean, we only talk about the order book, right? You need people to execute it. I've heard that before in segments like railways, etc., where there is suddenly an explosion of work, but you need skilled manpower. So when we say this is the order backlog and this is the time period over which we will execute this, unless you have the people to do it, I mean, those time periods can get elongated. And of course, on the other hand, there is the cost aspect of it. For a company like L&T, I'm assuming labor will be a large percentage of the overall expenses. Your thoughts?
Well, that's right, Prashant. I think the second point is a little more important. I think if you pay enough, you will find at the end of the day, we are supposed to have one of the largest manpower bases in the world, right? So there cannot be that there is not enough people who want to work. The reason they don't want to work is they don't like to work in the field. The mechanization, for example, in terms of welding, etc., is fairly higher than what we have in India. And to that extent, we are also not paying, we still look down on blue-collar jobs as if it's not something that you want to do, because the payment is both erratic, not enough, not sustainable, not happening for a long enough period. So, while these companies would be looking for gig workers near term and put them on, they will actually let them go as soon as the projects are over. That doesn't allow a creation of a trained manpower base. What do they do when the project cycle turns down? So for the near term, I would imagine it will take a year and a half, 2 years maybe, for this kind of shortage to work its way through the system. To the extent that these order books are fairly robust and therefore you are looking at least 3 to 5 years, I think the situation will ease off. But you would have to assume an increase in manpower cost. I don't know whether it's a very significant, a very large part of the overall cost base. It is going to be significant, but may not be the one that actually breaks the bank. So I don't think that increasing that number will work adversely for many of these companies, because the simple thing is there aren't enough companies that can take on the order flow that we are getting at this stage. So already they are building in higher margins. Maybe some of that margin will get compromised. But overall, if you're looking at it from the investor's point of view, there are even fewer companies than the ones who will accept the orders as the ones that are investable. So, L&T from that perspective, from the market, is fairly safe from any kind of drawdown.
Do stay on. We need to slip into a very short break with the news that the markets have just given up a tad bit. We were holding well above 19,400, so retreated a bit down to 19,380 in the last 10 minutes. Get into a break. On the other side, we'll be closer to the market closing. Welcome back. Counting down to the close. Anant, unfortunately out of time. Thank you very much for joining in. But it's going to be a good finish for our markets. Closing up in the green with a gain of 75 points in the Nifty, up 300 points in the Sensex. The disappointment bit will be that markets couldn't quite close at the day's high. At about 3 p.m., we were at the day's high. The Nifty went to levels of 19,426. But from that level, we've lost close to about 40 odd points. Some of the big winners in the large cap space include Bajaj Finance. You had strength in IndusInd Bank. Kotak Mahindra Bank had a good session. So banks, some of the banks at least participated. Both the Adani Group companies closing up higher with gains of about 2.5%. Hindalco surging, ITC up 1.5% in the IT pack. Infosys strong. On the losing side, Reliance Industries was the big drag, and it's finally closing at the day's low. Reliance Industries is going to go home with a cut of close to about 1.5% on the day. We had Jio Financial Services list and weakness coming through in M&M, Britannia, State Bank of India. But that's a large cap picture. Midcaps have done phenomenally well today.
Oh yeah, it's been an out-and-out solid day for midcaps. Look at the index. It's going home with a gain of just under 1%. Very, very smart advance decline ratio with over 1,700 stocks advancing. Just about 1,200 on the declining side. Big winners today. NMDC Steel for sure. Then you have some other actually PSU names like Aircon that did really well. Up on good volumes, 9% on Aircon. BLS International, 9.5% up. You had a Ramakrishna Forgings moving higher. Both MRPL and Chennai Petro, two of these refining companies, between 5% to 7.5%, depending on which stock you're picking out. GMR Airports, Tata Power, some interesting names, and a mix of old economy and new really coming through on the screens. If I talk about some of the losers, not too many. Delivery kind of lost out 3% on slightly heavy volumes, as did Paytm, these two new age stocks, which were down about 3%. But hey, I mean, should also mention today's listing. Jio Finance is going to go home around the 251 handle as it starts off its life on the listed street. So those were some of the highlights, but about 70 points up on the Nifty, so not bad at all considering the weak handover that we had from Wall Street.
Oh, absolutely. I mean, so we will again, I mean, I think for tomorrow as well, watch for a close above that 19,400. So intraday, a few kind of moves above that level, but not a close. 19,380 or so is where we leave off. Nifty Bank, that level was 44,100. And I think on the Nifty Bank, we will end at 43,950 or so, which is again about 150 odd points a shot. So that's the Nifty Bank for you. But 1,250 stocks higher, 1,120 stocks lower. Market breadth positive, but nothing very large or anything of that sort. And we've already highlighted bulk of the moves that we saw in the broader markets. The Adani Group stocks, by the way, have done pretty well. Adani Power, Transmission, and a few others, but Transmission and Power, of course, leading from the front there. Huge volumes on both those names. So that's the market. Not a bad close at all, and not a bad way to start the week as well. Well, I think that's the wrap. That's the closing bell, which is which is off. But don't go anywhere. We'll get you excerpts of the big conversations that we had earlier in the day. Market Masters is coming up next. We'll have Mahesh Nandurkar of Jefferies, Ramdev Agarwal of Motilal Oswal Financial Services. Conversations on the other side.